And good evening, everybody. This is Michael Filigera with logicalsignals.com. And tonight, again, we will be doing an Elliott wave update for the NASDAQ 100, the NQ. And this is for Tuesday, March 2nd, 2021. There's not a whole lot to be adding. We remain in the process of counting, as we can see here on the hourly chart, a corrective ABC structure and for a wave 2. And let me just pull this in a little bit and we can see that more clearly that what we're looking is for a primary wave 2. And within that primary wave 2, this is going to take some time, of course, and there is going to be an ABC of intermediate degree. And it would appear that we may have completed wave A at the overnight high. Actually, the start of the Globex session yesterday is where it reached the high. And then it proceeded to start to peel off. And down to this level, it was like the perfect little ABC you could see and thought, okay, we could rally. Market got caught. And then in the last hour, we really started to sell off more steeply. And not that this, again, it's a work in progress or the count is in progress, but it just opens up a lot more possibilities. And let me explain a little bit further. The first thing I want to do is I want to put the Fibonacci on here so that we can take a look at what indeed we are expecting. And that's actually, say 20, okay, we'll go right there. We would be expecting an ABC structure in and of itself to form wave B. If this is wave A, this would be wave B, and then we'd be looking for that rally, again, to those new highs, and we'll talk about that in a second. So counting the B wave can be tricky because B waves are, they're the oddball. They can come in many, many different patterns, and they can be very deceptive. So you might think, you'll have this period of acceleration or something will really kind of turn. And it's really nothing more than just a B wave. They're deceptive. So when you think they're over, they're not. So we continue to let the market tell us, but we know that there will be some parameters that go along with that. And let me just open this up. No, that didn't work. Okay, let's try to go to the 30 and then go back up. Okay, this we can see a little bit better. You can begin to see that we likely are in a C wave and it's subdividing, and the declines continue to be 5s, which is what we look for, and the intervening rallies are 3 waves. So within this section, we're going to continue to look for 5 waves to continue to move down until it's a complete a little bit larger 5-wave decline. So, but here are support levels that we would then look for. If, in fact, wave A is right here, then we're looking for an ABC. Most common is right here, 0.382 or 38%. Then 50%, and then ultimately we could move down to 618 and still be within yeah, that's exactly what an ABC down or a B wave in the context of the larger ABC in progress should look like and should take. So we are going to be continuing to look for additional downside. Now, it might accelerate like it was doing basically into the close, or you're going to reach points of support that will allow for a bounce. And the bounces have been very tradable. So all in all, it's not quick moving. Some of the declines are, but those are fun to catch. And again, don't pretend to be catching falling knives. Follow the market. You'll know when a market turns. You'll know when buyers come back in. Many people use a footprint chart, which actually shows when buyers become more aggressive or sellers become more aggressive. So you can get an idea. I happen to use these three indicators, the tick. There's the tick for the broader market, the tick for the NASDAQ, and the tick for the Russell 2000. And they kind of just indicate how many issues are being bought or sold at a particular time. And you can see those numbers grow, and then you can see volume pick up, et cetera, et cetera. So deltas pick up. There's many different ways that people measure the intensity of the buying or the selling at a particular moment in the market. And when you're a day trader, very important. In any case, I think that what we're going to get for tomorrow is we're going to have, this is going to be resistance. And again, if it begins to break above there and turns into a five-wave structure up, then we're going to say that this is likely complete, put a B on it, and look for it to break above there. And then, of course, I start to break above moving averages. Again, this is the 30-minute chart. And then looking for it to eventually break here. My expectations are that the market will likely hold these particular moving averages. And again, we still have all of Globex before the US opens again. If it does hold it, it'll put more gravitas, I guess, on the fact that these moving averages on a 30-minute basis, this is the 200, it's very flat. If the 50 goes flat, that's just kind of telling you it's going to act as resistance, and the market's just going to be held in a zone, not really going up, not really going down, just kind of traveling between a little bit of a range bound period. If it again starts to break down, we'd be looking for it to break 382, then break to a new low for the sequence, which is going to come underneath. All right, let's say 13,048. A good solid break below that. She will point towards 12,993, and then on down. And again, these little support levels are just, they may provide bounces, and those bounces may be tradable. So we need to watch and be able to act accordingly, I guess. So again, we have upside. We know what we're looking for. The basic, as we're leaving it, this structure and what lies below and the little bit larger structure suggests that we should make new lows below that before we begin to turn higher and complete this little bit larger pattern in progress, which is an A, B, C. So the C wave up still needs to come. And let me go back to the hourly chart, and I'm now going to remove this particular Fibonacci. Yeah, we're going to take those away. Go ahead. No. Undo, oh, undo and remove. Let's just remove them. Nothing. We're not getting any. There you go. Okay, so now I'm going to put, for the larger, let's do the Fibonacci's, and this is going to give us indications when and if, when the C wave begins, what we might be expecting when it arrives. Yeah, a little bit of that. And go back down to here. 58, and it's 62, 61, 64, 60, right there. Look. Okay, so thus far, A got a 50%, just about 50%. So wherever the C wave, excuse me, where this ABCB wave completes, and we were thinking it's at least got to make a new low. If not, we were looking for, like, I think 29,992, and then there's an additional number a little bit lower. So from there, we now can see where resistance levels are going to come in to complete the larger C wave. My suggestion is if it drops back down to here, it's likely going to come up into this upper area, possibly even higher. Remember, all it cannot do is break above 13,900.50. cannot break above it. If it does, it's a whole new ball game, folks. I do not anticipate that occurring at this point, but it could go. There are some, once we're into that C wave, we'll be able to put some better definition on it. The most common relationship is that the C will be equal in length to A. And right now we have 13,328. I'm rounding it. There's some math here. And that's 28 and 38 is 66 points approximately there. So wherever this bottom's, the most common would be that C would be equal to A. So you can see that we're up here. Now, if it's 600, it's going to be up here. So we would expect it to be equal. In any case, we will be able to put more definition on it once it begins. And I'm going to leave it there. We have our parameters for tomorrow. Again, today basically was choppy down, but not real eventful in terms of larger moves happening. So we'll expect pretty much the same until that C wave begins, and then we probably get a little bit better spurts of buying and selling. I'm going to wish everybody a good night, and the next update will be Wednesday evening.